Alright guys, the CPI report came up this morning and it have a mix of reaction. Yes, at the beginning of the market we were going down in numbers really bad. All the stocks were in red, and then in the other half of the day they start going up, and now we end up with a green market today. And all because one news. Yes, the CPI have a miss in one of their topics, but overall was really good for the economy. And in this video I'm going to explain you everything about that report, why that mixed reaction from the stock market, and how this is going to have a big impact on the next Fed meeting, which is going to happen on September 18th, and the cuts that they are going to do. Yes guys, if you haven't been on my channel before, my name is Omar. I like to talk about business, everything related to the stock market, and if you like those type of chat, this is your channel, so don't forget to subscribe to the channel. And of course, if you like what you see here, don't forget to hit the like button. So with that said, let's start with this. Yes guys, the CPI report came out this morning. Really good numbers overall if you check the result. Yes, we came up with a 2.5 increase, well actually we says decrease in the inflation rate, which is better than expected. Yes, we were expecting to be on the 2.6, but they came up with this beautiful 2.5 that is gonna help us all with our prices when we're buying stuff. Yes, really good number there. We actually went from 2.9 from the previous month on July all the way to 2.5 on this month. And I'm gonna tell you something, the average inflation rate in the past 60 years is 3.1 for the US, which I know this is not the number everybody want to see, because we all want to be on the 2%, but this is actually a great number. A great number that is, man, even better than most of the world's numbers, right? So, beautiful number today. But what happened? What happened that makes the stock to crash early in the morning and then actually bounce back at the end of the day? Well, what happened is that the core index came higher than expected. Yes, it came in at 3.2 and we were expecting a 3.1 result. And why is that? Well, the core number is all items except for food, energy. And those two topics were probably the deepest in the inflation that make the overall inflation rate to go from 2.9 to 2.5, right? So what happened is energy and food, probably inflation went really down, they decreased really big, but the other sectors are higher than what we were expecting. But overall guys, this I believe is a great report. If we check, look at this, we beat the expectation on the months over month. We were expecting a 2.6, we are on the 2.5. I mean, amazing number. But this is gonna have a real impact, direct impact right now on the Fed decision. And why is that? Well, the Fed is about to have the meeting on September 18th, and everybody have the hope that they will cut at least 50 points, right? We were going from maybe 50 points was most of the people hopes. The probability of that happening was really low, but it still was there. Like, we have an opportunity for the Fed to think about this and says, you know what, I'm gonna cut the rates even bigger, right? So, but that's not gonna happen anymore. Since the core number came up higher than expected, probably the Fed is gonna go with the 0.25 points, and that's it. That's the only rate cut that we're gonna have on September 18th. And that erases any possibility of us having a bigger cut. I mean, I don't know if that's a real bad news or not, but that's what actually triggered the red numbers. Because when the CPI report came out, all the news were about, hey guys, we didn't hit the core expectation. We hit the overall with 2.5, we actually exceed the expectation, but we didn't hit the expectations for the core values. And that was what everybody was saying, oh my God, now the Fed is not gonna cut the rate as far as we want with the 50 points. I don't think that reaction should happen, and actually you can confirm it, because then the market just bounced back again to the green numbers. Because let's be honest, the Fed never changed their mind. If they say they're gonna be cutting by the 25%, that's the number they're gonna be doing. And you can actually check the results. Actually, you can check the probability of that happening in one of the websites that the Fed has, right? And it was something like 25% cut will have a probability of happening of 70%, and a 50 point cut have a probability of happening 30%. Now that's not happening. Right now, if you check the website, it is like 88% a probability of happening 25 points cut, right? And that is basically saying we're gonna cut only 25 since we are about to have that meeting on September 18th. That is exactly what crashed the market. Everybody was like, no, this is bad. And then everybody realized, actually, it's not that bad. Think about this. We get a really good unemployment report last week. We didn't hit the expectation, but we doubled the amount of work, the amount of jobs openings, and we control it, the unemployment filings, right? That's one. Second one, we have the Fed about to cut the rates. Doesn't matter if it's 25 points, doesn't matter if it's 50 points, they're going to start cutting the rates. And we know the reaction that has to the stock market, into the country, and overall, right? Businesses are gonna start getting more money, people's gonna start spending more. So that's gonna be good for the economy. And now we just came up with a better than expected inflation rate. I mean, great numbers, really great numbers for us and actually for the country. And this is gonna help us. What is happening right now also is that we're about to have elections, right? Yesterday we have the debate. Everybody's talking who wins, who lost. I mean, at the end of the day, what matters is that this is an election day. I don't think any of the parties will allow a crash to happen in the market, because that will affect them one way or another one, right? And we have been getting a lot of good reports. So I believe what's happening right now is that we're on September. September is gonna keep going with this back and forth, the stuff going up and down, and all this, I mean, sentiment of we don't know if we're in a good spot or not. What I think is gonna happen is September's gonna pass, then we're gonna get in October, things are gonna start stabilizing a little bit. We're gonna be in a better position. We're gonna normalize our situation, and then, right, things are gonna start getting better. I believe by November, December, January, we're gonna be better. Also, the market has been doing great, guys. Check, I mean, the increase on the index from January, or the beginning of this year, January, to today, we are beating numbers. So I think we're in a really good shape. I think we're gonna have a really good run after September and October happens, but these numbers are really good for you and for me so far. So if you like what you see here and you want to know everything about the news on the business, stock related, everything about the stock market, don't forget to subscribe to the channel, guys, and I will see you guys on my next video. Thank y'all.